Good weekend. Ira Epstein, and here we are with your financial market wrap-up, your weekend edition. And this is for Friday evening, and this is the 22nd of March, 2024. All right, my friends, and looking at the markets and how they were, you would think you'd be down for the week and big numbers when you see you're down 338 points in the Dow, nearly 10 points in the S&P. The NASDAQ was up, the Russell was down. Gold got hit pretty hard today, down another $24, and the copper down 5 cents. So what's going on? I want you to look at the strength in the dollar. The dollar just became kingpin. Now, there is a race going on in the world, and everybody is doing what in central banks? They're starting to prepare, or they are cutting. We saw Mexico cut this week, Swiss National Bank cut this week. Today, Colombia cut their interest rates. We've already seen Peru, Chile. These are just some of the banks. But the Swiss National Bank was the big boy that did it. We saw our Fed chair say no, they're not ready at this point. Miss Lagarde was out just recently, and she'd like to see more data through April. But I'll tell you, some of the governors already are saying, why aren't they going to be considering making April a live month? Well, they can do whatever they want, but it pretty much goes by what she says. And I think she, along with our Fed chair, just want to push things back a little bit. Last night, if you get my full research, I gave my viewpoint on when the likely cuts will begin, where a pause might happen, and if the Fed's going to hit 3, how they do it. I don't know that they'll be able to do that or not, frankly. Depends how the data comes in. If the data comes in as it's been coming in, I don't see why the Fed is going to cut interest rates. If the data starts to weaken and labor goes up to 4% unemployment and the CPI and PPI start rolling over, especially if they roll over quickly, everything becomes live. But until that happens, our Fed probably stays just where they're at for the time being. They've given you the words, but now we have to see what that all means. Will traders try to make June a live month? Of course they will. We're seeing that if you look at the markets here, it's still got heating oil up on this particular chart. I should have made that your gasoline, which has been going up a little bit. And you're just sort of drifting in the water right now in the energy markets. When we take a look at the S&P, for the week, you were up 3.71%. Remember what I said? If you look at today, you'd go, oh, the markets are down. Look at that. That's not the case. This is the highest close we've had. Do you know how many analysts were predicting that we'd end the year at 5,200? And here you are on the futures, at least right now, for the month. You're at 5,293. Wow. When you take a look at it on a weekly chart, up and away you go. And just take a look at how this weekly chart looks on the market. I mean, it's been pretty much a nonstop with higher lows, higher highs on a weekly basis. The market has stayed over the 18-week average of closes ever since we flip-flopped in October, November, got over that average, and that kept the market going. Has the market paid attention along the way when it has hit the upper Bollinger Band and backed away from it? You can see it. It has. Do I have reason to think that'll change? Well, no. Generally speaking, when you hit a Bollinger Band, some of the algorithms program in, let's cut some positions back. And if the market is embedded, as it is, they're buying the market back on the brakes. That's why I still look for buying opportunities in this market. As long as you have that embedded reading and the trend is up, why not? But I don't think they'll buy the Bollinger Band. In the Dow, you also have the embedded reading. You're about to hit the upper band. You can see how the market has fared in the past when you get there. So you're at a zone where the market can go into a pause or get you a pullback. Could it go higher? Of course it can go higher. But I'll bet on what the Bollinger Band does more times than it doesn't. And that doesn't mean you get bearish up there. That's not what I'm saying. There's places where you start moving your money around. You're even in the NASDAQ with your embedded reading. You haven't hit the upper band in a while. If you can get to 18,887, you hit it, and I would expect that to happen. And if you wanted to kick up the Russell a bit here to 2144, that could be your number too. Then we look at the 5-year notes. And as much as people keep saying, oh, the interest rates are going higher, they've really gone nowhere. For the week, the market was actually in futures up 1%, so that means real rates fell a little bit. They're an inversion market. The same in the 10-year note. When I look at the dollar index, we have lower highs. The next resistance in the market is the 104.53 area to the 105 area, the upper Bollinger Band and the 100-day average. Momentum's up, but getting a bit overbought here. In the euro, the trend is down. This week's high would be an important number to not take out. As long as it's not taken out, you could still be headed back down to 107.24. And the pattern has been in the currencies, those that talk of easing quickly go down, and the dollar seems to go up against them. In the Canadian dollar, lower highs, lower lows. Next support zone, 73.15. But again, you're in oversold territory in this market. And in the yen, well, we saw the Bank of Japan reverse its policy, but not do anything yet to support the yen. It's one thing when you say, no, we're ending negative interest rates, we're doing certain things with curve yield, but the market, it didn't care. You were still down 0.33%. You'd have to get back over now, as I see it, the 68, let's call it 68.40 level on a closing basis to say, maybe the market has found itself a low finally. In Bitcoin, a bit of a correction, 7.5% this week. Support's rather far away. When you reopen, you're probably on the beginning of the week going to lose the embedded reading. If the market stays lost, you could be going back to the 50,000 range. That's a number that I was mentioning earlier this week. When we look at Brent versus WTI, on a weekly basis, it's coming back up, where the Brent has got the momentum. And as you look here, you can see, why is the market stopping here? Well, you're at a Bollinger Band and 100-day average. So that's a natural resistance point. It's not a bear point in the market. It's a resistance point in the market. And you have the same identical thing happening in WTI. In the Rebob gasoline, I've been bullish, as you know. The market is now at the 100-day average in the upper band. On a weekly chart, no, I would not tell traders to buy up here. This is an area of some resistance. So we've got to be looking at the daily charts to get a better feel as to where that may or may not be. I expect, as you can see, that we're going to run into some resistance points in the markets. One of the ways you find them is with this formula called a pivot point. You'll hear it mentioned over and over by different people. They'll do it on the TV shows, other areas. And what pivot points do is there's a formula that you have in your charting software. It'll find the center line, 2 lines above it, 2 below it for resistance point, support points. I tie it together with my slow stochastic study, put them all on one chart, and teach you in a video series how to use it. It's free. So if you'd like to learn this study, it's pretty simple. You go to iraepstein.com, and the reason it's free, I like to show you how I'm teaching. My new charting course will be out next week. So this preps you, and you can see my method of teaching you. You go to iraepstein.com. You go to free offers, it'll be in the pivot point area, or you can move your cursor right up here and it'll work that way as well. It'll take you right to it. I'm Ira Epstein, that'll be the free offers. I'm Ira Epstein, you have yourself a good weekend. I'll catch up with everybody come Monday. Take care.